Welcome to Drift Shield, your premier source for clear guidance on automotive regulations and driver safety standards. Today, we are breaking down the state-mandated certificate process to help you regain your driving privileges smoothly. Navigating license suspension can feel overwhelmingly complicated when you don't know where to start or what to request. Many drivers assume that getting back on the road simply requires paying a court fine or visiting an office. However, regulatory authorities across most states require an official certificate before approving license reinstatement. Understanding every filing requirement prevents costly delays and keeps your driver record compliant with state laws. A certificate of financial responsibility is an official government document filed directly by an insurance provider for you. People frequently mistake this document for an actual auto insurance policy, but it is simply formal proof of coverage. State motor vehicle departments require this document to guarantee that high-risk drivers maintain liability insurance. When a driver receives a conviction for driving under the influence, this mandatory administrative filing begins. The primary purpose of this filing is protecting other motorists on public roads against damages from traffic accidents. Without this certified filing attached to your driver profile, state regulators cannot authorize your driving privileges. Knowing why a state agency triggers this legal mandate helps you handle your personal reinstatement requirements effectively. Common reasons include severe traffic infractions, driving without valid auto insurance coverage, or causing an accident. Courts can also mandate this requirement following alcohol-related offenses, reckless driving, or repeated license suspensions. Every state sets distinct legal guidelines regarding which specific violations require formal proof of financial protection. Once an administrative mandate is ordered against your driving record, you cannot avoid the required compliance timeframe. Proactively addressing the root cause of your suspension allows you to complete the compliance process much faster. The initial phase of fulfilling your financial responsibility obligations involves reviewing your suspension notice carefully. State departments of motor vehicles send formal correspondence detailing the exact reinstatement criteria you must satisfy. This legal document specifies the precise filing period, required liability limits, and administrative court fees owed. Reading these specific instructions prevents you from purchasing incorrect insurance policy levels or submitting wrong paperwork. If you lost your physical notification letter, you can request a replacement copy directly through your local vehicle registry. Taking time to verify every requirement upfront ensures your reinstatement paperwork moves forward without unexpected rejections. After reviewing your state notice, you must contact an authorized insurance provider that handles regulatory government filings. Not all automobile insurance companies offer state certificate filing services due to the increased risk profiles involved. You need to inform the customer service representative immediately that you require a formal financial responsibility filing. The insurance agent will evaluate your driver history and calculate a policy rate based on your risk category. Purchasing an active auto insurance policy that satisfies or exceeds your state minimum liability limits is mandatory. Once you select your policy coverage options, the carrier prepares the necessary regulatory paperwork for official submission. Your insurance carrier handles the actual submission process by sending the certified document directly to state regulators. Individual drivers cannot self-file these administrative documents, as states require direct verification from insurance carriers. Modern state systems usually process these electronic filings within a few business days after receiving your payment. Most insurance companies charge a small administrative filing fee that typically ranges between $15 and $50. This administrative fee covers the submission process and is completely separate from your regular monthly insurance payment. Asking your insurance representative for a digital confirmation receipt helps you track the progress of your filing. Maintaining uninterrupted automobile insurance coverage throughout your mandatory compliance period is critical for keeping your license. Most state statutes require drivers to maintain continuous financial responsibility filings for 3 consecutive years without gaps. If your policy cancels or lapses for even 1 day, your insurance company must notify state authorities immediately. That mandatory notification automatically triggers a secondary suspension of your driver license and resets your compliance clock. Resetting your multi-year compliance clock means you must start the entire filing process over again from the beginning. Setting up automatic monthly premium payments helps ensure that your insurance coverage never experiences an unexpected lapse. Drivers who do not own a personal motor vehicle often wonder how to satisfy these mandatory state requirements. If you regularly borrow automobiles or plan to drive rental vehicles, you can purchase non-owner auto insurance coverage. A non-owner insurance policy provides necessary liability coverage while satisfying state financial responsibility certificate mandates. These specialized insurance policies cover bodily injury and property damage when you drive vehicles owned by other people. Insurance companies can easily attach the necessary state certificate filing directly to a non-owner auto insurance policy. This flexible option allows non-car owners to satisfy state mandates legally and regain their official driver privileges. Understanding the financial costs associated with state financial responsibility mandates allows you to budget your money effectively. While the single-time filing fee itself is relatively inexpensive, your overall monthly auto insurance premiums will increase. Insurance companies categorize drivers requiring regulatory state filings as higher risk, which raises base policy pricing structures. Premium rates vary significantly depending on your specific traffic violations, geographic location, age, and chosen insurance company. Shopping around and obtaining quotes from multiple high-risk insurance specialists can save you hundreds of dollars annually. Maintaining a clean driving record over time will gradually help lower your insurance costs back toward normal rates. Different states use slightly different legal terminology and regulatory forms for financial responsibility documentation across the country. For example, while most states utilize standard financial responsibility forms, specific states require higher-tier forms for serious driving convictions. It is vital to confirm the exact form code required by your specific state Department of Motor Vehicles to avoid immediate rejection. Simply filing the required certificate does not automatically give you legal permission to start operating a motor vehicle again. You must pay all required state reinstatement fees directly to your local Department of Motor Vehicles office and satisfy court obligations. Checking your driver license status online allows you to confirm when your driving privileges are officially active again. Moving to a new state while under a mandatory filing requirement involves specific legal steps that cannot be ignored. State driver license databases communicate with each other nationwide, so you must maintain active filings in your former state. Lapsing on your insurance policy during your mandated filing period triggers immediate legal consequences, leading to an immediate license suspension. Preventing policy lapses is the single most important factor in completing your financial responsibility mandate successfully without restarting your compliance period. Understanding the difference between state minimum coverage limits and comprehensive insurance coverage protects your personal finances long term. Basic liability pays for others' injuries, but you need collision and comprehensive coverage for protection against theft or weather damage. Commercial drivers face unique challenges as employer insurance policies may not automatically cover personal regulatory filings. Keeping careful personal records of every filing, payment receipt, and state correspondence protects you against administrative errors and glitches. Once you fulfill your mandatory 3-year requirement, contact your insurance carrier to officially remove the certificate writer from your policy. Working with an experienced insurance specialist simplifies the process and ensures that all legal requirements are fulfilled correctly. Developing strong driving habits and obeying traffic laws will keep your record clean and eventually drop your risk rating. Staying proactive guarantees you complete your obligations without facing repeated suspensions, leading back to complete driving independence. Thanks for watching. Subscribe to this channel, like the video if you found it helpful, and leave your questions in the comments.